Good day, everyone. Welcome to the weekly note of GTC Traders. This is a feature we do each week, as you can tell if you click on the little category for the GTC weekly note. This is something that we do each week. If you are new, I am the senior partner of a separate private proprietary firm, and we decided, hey, how about we put our weekly note up? We're not by any means the only one that does a weekly note. This is something that's very common among many firms, weekly note or a daily note. And we thought, hey, how about we just make this real easy on ourselves? How about we just copy and paste sort of our weekly note from our private proprietary firm and put it over here on GTC Traders. So that is what we do. And the article itself has all of the vagaries usually of different thoughts as far as the economic calendar for that week and what we see in interest rates and various markets. If you're sort of curious about a weekly note, if you go to the GTC Traders YouTube page and you look at something like the playlists, so you click over at the playlists, come down here, go to the GTC weekly and daily note playlist, look at the full playlist. The first three, maybe even the first four videos really describe why so many firms do this. Okay, so why so many firms have a weekly and a daily note, really what is the value of a weekly and daily note, what it is and what it is not. So that's just for folks who are new. And then, as I will now, I usually yabber on about the vagaries of each week. So where are we at? I will tell you where we're at. We're a week late. Last week, I was so busy with so many different things, I kept on saying, I'm going to get to the weekly note. I'm going to get to the weekly note. Well, it's Wednesday, and it's FOMC, so why not get to the weekly note after FOMC? And then, oh, look at that, it's Thursday evening. I'll get to the weekly note. And here we are at the beginning of the next week, and I still had not gotten to last week's weekly note, so we're going to make an amalgam. Right? FOMC was interesting to me because the Fed is kept saying what they keep on saying, but all the questions revolve around rate cuts. I'll get to that here in a bit. As far as, besides being late, let's talk about a few things here. First on deck I want to talk about is that NVDA trade. Thank God I am out of that NVDA trade. As I said before, I broke one of my rules, and the market did what it should do. It wrapped you right across the knuckles, and that's a good reminder to say, don't do that. Stick to your rules. My rule being, I don't like to get involved in stock. I mean, I like high IVR. If I'm going to have an options trade, obviously I want to make more money. However, I don't like to get involved in just meme stocks that are in the news. And definitely a stupid way to do it is to do it short dated so that you have all this gamma explosion against you and exposure. So what did I do? I went with a meme stock in the news. I got sucked in by what I tell other people not to pay attention to. I got sucked in by that juicy premium. And so, yeah, I got sucked in, and I went short dated on a meme stock that's in the news. And the market did what it should do. It wrapped me across the knuckles a good one. I tried to defend, and I tried to defend, and I tried to defend. And very often with options, you can win for a long time. But when you lose, it's an inverse risk profile. Right? So you're going to lose. And I got wrapped across the knuckles. It actually wasn't that bad of a loss, as you can see on your screen now. That's all I lost with commissions and everything. So no big deal, right? I just didn't, quite honestly, I didn't like all the work that I had to put into it. I am very much a believer in return on effort. Return on the effort you put in. I don't like to put in a ton of effort unless I'm getting a ton of return. And that was just bad ROE, and I don't mean return on equity. I mean return on effort. So we are out of that one. However, we are still black for the month. So, we had the treasury bills coming in, all the other options positions we sold. The discount to yield came in. So, and it's still yet to come in. By the way, on the 26th, we'll be doing the same thing that we always do, right? We go in for 4-week bills again, compound what we've done. So, yeah, that all came in, and with our longs and everything else, we're still black for the month, which I guess is the important thing. And let me rewind here now a little bit. Let's talk about FOMC and the inflation thesis. Something that's always been said is the interest rate markets are always right. Sorta, I guess. This is a June 2024 SOFR futures, which is basically 3-month interest. It's sort of the replacement for the old euro dollar, right? And these have been the markets that I've been paying attention to. This is the 2024. I actually like looking at the 2025. You're not going to be able to see much difference on the screen when looking at each individual term. But here's the 2025. Listen, the market is so large, dwarfs so many other markets, that yes, in totem, they price correctly for expectations. However, there's been a catch-up where basically the inflation data has been the inflation data. We have to wait for all of all of March, all of April, and all of May to really get a handle on where we're at with inflation right now. We have nailed inflation to date, but we're very much in the Fed's camp. We need to wait and see. And it seems to us that the data's been sticky inflationary. And therefore, the market has had to catch up. I think the market itself got a hold of itself. In the end, the market will price everything correctly for the data once it's out. However, I think the market got ahead of itself back at the beginning of 2024, all the way to February with these cheaper yields, and the inflation data's come out. The market said, holy crap, what the heck are we doing all the way up here with cheaper yields, and has very obviously, as you see, sank lower to correctly match what we see when it comes to the inflation data. I've said, and we have said, that we need to see more data. We're sort of in the camp that the Fed's in. I think it would be premature to cut rates right now. And it seems like the data is sticking inflationary. We have to wait and see, but there's headwinds and there's data that goes both ways. But it seems to us, when you look at inflationary data, it seems to be sticking. So higher yields, lower prices, and so forth. Sorry. I mean, that this is where we're looking at. It's sort of been stuck here for a good solid month. We are where we were at the beginning of the month. However, you can have structural inflation with other signs in the economy that are slowing down, and inflation is sticky. We've seen it in the past, in history, and just beware of that, okay? We're still taking in data. When it comes to stocks themselves, we've been doing well. We have some high-yielding pieces, right? This is an ETF that tracks emerging market sovereign debt. We got that for a nice song. And we've had other pieces doing quite well. Where did we get Costco? Did we get Costco back in the 500s? So we've enjoyed a nice ride for Costco. Even Kroger started to participate, right? Obviously with the fundamental news there. But even our Kroger that we got back, I think that was in November or somewhere around there. Even our Kroger has decided to join the party, right? Valuations provide their own leverage. That's not my mantra. It's a hedgie from Midtown that I got to know years ago, sort of on the periphery. Somewhat well-known guy in the hedge fund world, equities hedge funds, and he always used to like to say that 1,000 points that mean absolutely nothing to those who know which hedgie I'm talking about. But yeah, hedge fund out of Midtown. I think he's still in Midtown. Regardless, valuation provides its own leverage, right? And that's what we pick up. There's pieces I haven't picked up that I have for myself for equity income, and I haven't picked up because I didn't feel they were at a good value. What are some other stocks we've had that are playing along? I've loved this one personally because it's so hated. And there's nothing more satisfying than getting a stock that is so hated and it rips everybody's faces off. So Wells Fargo has participated as well. Now, we've said that I believe we're in a stock market bubble, right? I think that bubble has just begun. Yes, I know I have yet to get to it on Read the Report. However, I'm getting there, right? We got a really long entry out there on the Patreon side. So if you're not aware, we have a Read the Report and Read the Position. And Read the Position is just tier 1. It's like, here's our thoughts for all of these markets. Boom, 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 boom. Right? Here's how portfolios we're thinking as far as our mandate and the way we approach things. here's how we're positioned and everything and what we're thinking about for each one of these different types of mandates since we're multi-strat. And read the reports more our thoughts, right? So we've got one entry out. But I will specify this. When it comes to a stock market bubble, I think we're at the beginning of one. Now, when does a stock market bubble come to an end? Nobody knows that. I was having a talk with a friend of mine, a conversation with a friend of mine recently, and we were talking about that, like what could be the impetus for a downturn. And he reminded me of something. He said, listen, you never see it coming. Whatever it ends up being, you don't see it ahead of time. In December of 2019, none of us were talking about a virus that lands on the world stage, the entire world shuts down, and basically causes the world economy to come. Nobody was talking that way. We didn't see that coming back in 2018. Nobody was pointing to that as, that will be what happens in 2020 to stop this nonsense. Just these, the crazy rallies. It's the same thing in 2001. It's the same thing. Well, 2008, we saw a lot of what was coming because there was a lot of, systematic risk, and a lot of us saw it. Despite what you read in popular books by quote unquote researchers, thousands of people were talking about that housing bubble. Heck, there was a blog out years ago, and I think it's still out, like Dr. Housing Bubble or something like that. Like everybody had a blog and was talking about it. Some of the way that systematic risk spread was not really foreseen. But regardless, I'm getting off track. The point is, a lot of times, whatever causes it to stop, you never saw ahead of time, right? So our thesis is, and there's been some really good commentary. Ray Dalio came out with a piece, and I highly recommend it. I've got some thoughts on his piece, and it's not like criticisms. Like, there's a lot of these furu types that are like, oh, that guy read that, and I disagree with him, and I think he's wrong and stupid because of that. Well, if you read anything by Ray and that's your approach, you're an idiot. I'm sorry, but you're an idiot, right? He makes a lot of great points. I think his piece was particularly focused on one piece of a bubble. I will say that. I think his piece was excellent. I think you have to read it if you haven't read it yet. But I think it's particularly focused on one phase of the bubble, right? That was my impression. I want to read it 2 or 3 more times because it was so well written and done that I like to read these things a few times. But we believe that we are starting a stock market bubble. We're at the very beginning phase of it. When that ends, God only knows, and God only knows why. I'm not going to be so arrogant as to think that I can predict that. But that's just been our thoughts, right? We will play it as we play it, and that has been our thoughts for the weekly note for sort of last week and sort of this week coming up, and that's been what it's been, right? Our thoughts are only good until they're canceled, thus why we call ourselves GTC traders, because nobody can predict the future, no matter what they would like to try to tell you. They can't, and I can't. And that has been what it's always been. It's simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.